Ladies and gentlemen, good day and welcome to the Aditya Birla Sunlife Asset Management Q3 FY2024 earnings conference call hosted by InCred Equities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jignesh Shial from InCred Equities. Thank you, and over to you, sir.
Yeah, thank you, Renu, and good evening, everyone. On behalf of InCred Equities, I welcome all to Aditya Birla Sunlife Asset Management Company 3Q FY24 earnings conference call. We have along with us Mr. A. Balasubramanian, Managing Director and CEO, Mr. Parag Joglekar, Chief Financial Officer, and Mr. Prakash Pugle, Head Investor Relations. We are thankful to the management for allowing us this opportunity. I would now like to hand it over to Mr. A. Balasubramanian, Managing Director and CEO of Aditya Birla Sunlife Asset Management Company, for his opening remarks. Over to you, sir.
Yeah. Thank you, Jignesh, and thank you for the introduction. And good evening to everyone and for attending today's investors call. I'm sure the beginning of the new year has been great for everyone. I also hope you had the opportunity to go through the earnings presentation, which is available on the stock exchange and our website. Let me first begin with the economic outlook and mutual industry update. On the economic outlook, we believe the new year will be brighter as some of the key concerns of 2023, such as U.S. recession, inflation, rate hikes, and geopolitical tensions have receded. The interest rate cycle has likely peaked out with an expectation of the rate cycle easing across most economies at the beginning of this year. We expect a soft landing in the U.S. and slowdown in global growth, but not an outright global recession. And 2024 will be a year when more than 60% of the world population goes for election, and therefore the fiscal policy is expected to remain loose globally. And overall global macro backdrop has turned supportive of India. India remains the fastest growing major economy in the world and is well on track to become the world's third largest economy for the next 5 years. It has structurally transitioned to a low macroeconomic volatility regime. It will support lower risk premiums and higher valuations. The macro outlook for India also seems to be enjoying the Goldilocks scenario with reasonable growth momentum, stable commodity prices, especially crude, and slowing inflation and weakening dollar bias. India's GDP is expected to grow close to about 7% and upwards of 7% in FY25. With respect to the MF industry, as of December 31, 2023, the Indian mutual industry quarterly average AUM grew by 22% on a year-on-year basis, reaching to 49.21 lakh crores versus 40 lakh crores as of December 31, 2022. During the quarter, the industry witnessed net equity sales of around 91,700 crores to new fund offering and existing funds. Within the existing equity and hybrid categories, arbitrage funds and small cap, sectoral funds, multi-cap and mid-cap funds saw the highest net inflows. The mutual industry witnessed a total NFO collection of about 6,100 crores during this period, part of the 91,700 crores of net sales. The industry SIP flows grew by 30% year-on-year from 39,573 crores as of December 2022 to 79,610 crores in December 2023. The total number of mutual fund investors stood at 16.7 crores with an increase of 17% year-on-year basis. The individual average AUM grew by 30% on a year-on-year basis and contributed 60% of the total AUM. B30 cities accounted for an average AUM of around 17.8% of the total AUM. Coming to ABSL AMC performance, in Q3 FY24, our overall average assets under management, including alternate assets, reached 3,20,000 crores, growing by 11% on a year-on-year basis. The mutual fund quarterly average AUM stood at 3,12,000 crores and equally average AUM stood at 1,30,000 crores. SIP flows are increased from 942 crores in December 22 to about 1,005 crores in December 2023. As is stated, customer acquisition remains an integral part of our strategy. We have added close to about 4.6 lakh folios the last 9 months and serviced around 8 lakh folios of investors. Our overall asset mix between individuals and institutional customers account for about 42% of our overall assets and management. Our strategic efforts across various channels to enhance our market presence have delivered a favorable outcome this quarter. As you are aware, we recently brought in a co-CIO equity to further strengthen our investment team. As we speak, we have added new members to our leadership team to lead and drive our retail sales, building on our strong presence and distribution network and gain further traction in the market. In the upcoming months, we even aim to make few structural changes in our alternate assets vertical to build on the momentum that we have achieved so far in the PMS and AIF business and create robust franchise in AIF, PMS and passive business as we move forward. Our efforts have worked well with the contribution of retail franchisee increasing to 52% and the contribution of B30 cities has grown to 17% as of December 2023. Our sales ecosystem, which includes virtual relationship manager, Sampark, service to sales, digital distribution, all of them are supporting the overall retail sales growth, have seen a favorable result so far. Coming to our alternate and passive businesses, our passive offerings grew by 36%, around 29,600 crores as of December 2023, and has a growing customer base of over 6 lakh folios. Our current product suites consists of about 43 products. On the AIF front, fundraising is underway for our ABSL India Special Opportunity Fund Category 3 AIF, and our ABSL Structured Opportunities Fund is also in pipeline. Is a Category 2 AIF is also in pipeline to be launched in the current quarter. We have launched the ABSL Index Linked Fund Category 3 AIF under the GIFT City, which is investing in MED's index linked note issued by one of the foreign banks globally, which is fundraising is on the way, and hopefully we should see the closure in the coming quarter. Moving on to the financials for the quarter, our Q3 FY24 revenue is at 421 crores, up by 16% year-on-year, and profit after tax for Q3 FY24 is at 209 crores, up by 26% year-on-year. For 9 months ending December 31, 2024, revenue is at 1,201 crores, up by 17% year-on-year, and profit after tax is at 572 crores, up by 24% year-on-year. With this, I would like to conclude and open the floor for any questions that you may have.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Aditya Modani from Prabhudas Lilladher. Please go ahead.
Hi, I just had a couple of questions. Can you just share the blended yields for the quarter and at what levels do we expect the same to stabilize? And what is the SIP AUM for December 23?
Yeah. So, good evening. The blended yield for the equity is in the range of around 69-70 basis. For that, it is in the range of around 24-25 basis. And for liquid, it is more or less in the flattish on 13 basis.
The SIP Prakash will learn.
Aditya, our SIP AUM for December is 66,741 crores.
And at what levels do we expect the blended yields to stabilize?
So on the
if you could quantify it, or even in a matter of years, as to how many years?
So equity may see a drop a little bit, even future, because as the size goes up, the accrual will drop, and the new sales will will replace the old, which may have an impact on the yield. So maybe couple of basis, we may see another three years sort of dropping in the yield.
Okay, all right. Sounds good. Thank you.
Thanks, Aditya.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Nevin from Motilal Oswal. Please go ahead.
Hello. Hello.
Yes,
Am I audible?
Yeah, you're audible, I mean.
Yeah, I had one question regarding, so what has been the color on net equity flows for the quarter and how is this shaping up?
Yeah. So I think in terms of flows, of course, overall the sales for the growth in the month of December was lower than the industry. But however, we are seeing some pickup coming in the month of January. Broadly, we have seen inflows in the small and mid-cap fund, Pure Value Fund, Digital India Fund. We have seen some bit of outflow in the ELSS schemes, which is predominantly the ATC schemes. And but as it stands today, in the overall momentum in the month of January, we are seeing some of our funds which are in the top quartile performance, seeing some inflows to the online platform as well as in the offline platform. Contribution has been rising, especially in the PSU fund, Digital India Fund, Pure Value Fund, to the other funds. We're also seeing some pickup in the overall SIP flows, along with overall pickup in the overall, as I speak, the numbers have crossed about 330 in the month of Jan. That is something that comes on the back of the improved performance that we are seeing in the equity, and hopefully we should see that trend continuing in the current quarter. Therefore, it reverses the trend that we have seen in the past.
Got it. So for October and November, how were the net flows compared to industry? If you can just give some color on that as well.
Yeah, normally we don't disclose the numbers.
We don't disclose this number, but compared to the earlier months, we have seen a positive net sales in the month of November and December.
December.
Yeah. And for the quarter also.
Yeah.
Okay. Got it. Thanks. This is helpful.
Also, just take into account that I think the last quarter we raised funds about 850 crores, 890 crores to the transport and logistics fund, coming from close to about a lakh of investors.
Okay. Got it. Thank you.
Yeah.
Thank you. Participants who wish to ask questions, please press star and 1 on the touchtone telephone. Next question is from the line of Aman Singh, Anand Singh, Sar Singh from Nuvama Wealth. Please go ahead.
Hello. Sir, thank you for the opportunity. So as I can see, other income for the quarter has raised significantly due to the strong capital market. So can you break down the treasury book that we have of how much percentage have we invested in equity?
Sure.
Yeah. So hi Aman. Aman, as you rightly said, we have seen a growth in other income mainly on back of capital market doing very well. Plus, even the debt market has done pretty well, which has resulted in a better yield on the overall treasury portfolio. In the range of around 13% of the overall portfolio, which includes some of the seed capital which we have to invest as per the SEBI requirement, and other is some of the seeding which we have done to some of the themes in our equity funds and AIFs, which has resulted in the overall percentage of 13 in the treasury book.
Okay, thank you.
Thank you. Participants who wish to ask questions may press star and 1 on their touchtone telephone. Ladies and gentlemen, to ask questions, please press star and 1. The next question is from the line of Dipanjan Ghosh from Citi. Please go ahead.
Hi, good evening. So, firstly, on the expense side, you mentioned, if I heard correctly, some structural changes on the alternate business. So just wanted to get some color on what are the changes and what sort of expenses should be related to that. Second, when you mentioned, your net flows were positive for November and December, could you give some color on which schemes these were from, and also if you can give some color on the gross to net, I mean, in terms of how that has been shaping up over the last few quarters or months. And lastly, you gave the yield number on the blended book across segments. If you can give, for the equity segment, if you can give what is the net yields on the fresh business that is coming, or at least what is the differential between the blended book versus the fresh?
Dipanjan, what is the first question that you had on AIF expenses?
So, the first question was, so if I heard correctly, you mentioned that there are some structural changes that you're undertaking in the alternates and PMS businesses.
Okay. Yeah. No, basically on the AIF and PMS, one, of course, we are beefing up the team with the head of credit being recruited. That's something which we are doing. And hopefully the person should be on board by Jan with an intention to offer credit opportunities fund to the growing HNI needs. That's something we'll do. Therefore, we'll have briefing with the team. And second, within the existing team, we're also, of course, giving some responsibility to people with the head of retail coming on board, and to beef up that segment of the business. We're making some changes that may not lead to incremental cost, except the credit guy coming on board will have an incremental cost which is coming in the form of salary. So the revenue will start coming in later. So that's something we are doing it, given the fact that AIF, PMS, both on credit and equity, have got significant potential for us to grow. And given the fact that we have created a good performance track record within the PMS space, that's something which we are building up. Given that, again, high capability that we have in running credit fund, that's also something we plan to launch it once the person is on board. So that's something I just mentioned about it. In terms of sales, generally we have been seeing flows for us coming in, small cap fund and purely fund, digital India fund. These are some of the schemes. PSU fund, basically sectoral fund, we are getting money, including the transport and logistics fund, as you mentioned about, as again sectoral fund. We are largely seeing the redemption pressure on some of the schemes getting reduced, except on real estate schemes, where we have seen some kind of redemptions, which of course in general, the industry also seen some outflow in that category, but ours was a little higher in the industry, given the fact that performers are not fully backing from the overall perspective. But the gross sales generally in the range of about 5.5% to 6%. That's the range. That's something our endeavor to actually improve the numbers. Well, overall productivity increases, which we are seeing it happening in the month of Jan, in terms of improving both gross sales and net sales, with increased contribution coming from the SIP as a category, which I just mentioned earlier. But also you're seeing an improvement coming in the month of Jan. And then the last question is on
the yield on the fresh versus blend book.
Yeah, fresh purchase. Yeah.
So generally the sharing on the fresh book is in the range of around 65% around. So that will be a little bit lower compared to the stock which we have. The average yield will be in the range of around 69 to 70 basis on equity side.
Got it. And if I can just have a follow-up on the second question, can you give the NFO flows that you got during the quarter?
Yeah, 799 crores we collected.
800 crores. So even X of that, you will have a positive net inflow for the quarter, right? On the existing schemes on equity. Is my understanding correct?
Yeah.
Okay. Thank you, sir, and all the best.
Thank you. Participants who wish to ask questions, please press star and 1 on their touchtone telephone. The next question is from the line of Devesh Agarwal from IIFL Securities. Please go ahead.
Good afternoon, everyone, and thank you for the opportunity. So, just continuing on the yield on the new flows, you mentioned 65% is the sharing. Some sense if you can give, as you said, that on the book we are earning a blended yield of 69.70. Can we consider 55.60 would be the yield that we have on the new flows?
Yes, it should be around that range, Devesh.
Okay. And sir, is there any possibility of this to improve the yields on the new flows based on the contracts that you have with the distributors? Is there any scope or headroom where we can reduce the payouts to them from say 65 to any number? Is that a possibility or very difficult?
So it will be more in line with the market because it's a very competitive market. So we will have to be in line with the market and we behave how the market has been behaving. But obviously, as we have been saying, that the mix will be the longer the EM, the sharing may drop. So that may help us a little bit. But otherwise, the sharing will be more market driven rather than individualistic.
But one of the areas, Devesh, that we are trying to also build is we already built about 30-member team on the direct channel. We are now seeing wherever customers we can service directly, offering products across PMS and AIF and fixed income and equity. That's something we are seeing a pickup in volume. So as that size starts growing continuously, may lead to a bit of better margin getting protected. Though the overall margin remains the same between the distribution-driven channels and direct channels, because anyway the expenses are calculated only after the distribution payouts are calculated. But however, that volume increasing would lead to marginal improvement on the profitability as time progresses. As the volume starts coming in, we'll see that contribution coming in.
Right, sir. And sir, in terms of your distribution strategy, you did mention that you are focusing on creating direct channels. But at the same time, we also see that you have added almost 10,000 distributors to your MFD network. So any particular strategy that you can share in terms of which could lead to a higher flow market share for us?
Yeah, of course. One, the traditional channel engagement remains. That will remain as one of the core contribution to the business, which is your banking channels, ND channels and MFD channels. And MFD channel is quite large for us. Therefore, one, activating them continuously. Second is reaching out to emerging market, smaller locations, and ensure the contribution from MFDs increases. We have separate channel to do that. And third is the vertical that we have created, which is called the virtual RM model and sales service model. These two combination, we have set a separate target for both the teams to ensure that we actually bring in higher contribution coming from the channel partners. While doing that, we also, through our internal brainstorming, we come out with a strategy called sales execution excellence model, which is nothing but identifying high potential people who have been dealing with us for many number of years. For some reason their growth participations may not be up to the expectations. That's something we have put out a separate strategy, wherein 80% of the AUM come from, say, 20% of the people. How do we ensure that those 20% of the people contribute to the success? So we brought in a different level of engagement program with these channel partners and showcasing the changes that we have brought in the last few months, and also the improved performance that we are seeing in equity with respect to the competition as well as with respect to the benchmark. That's something we are going aggressive in terms of engagement program, which my own belief is will start contributing the overall incremental growth. And last but not the least, with the direct channels, which I mentioned about, is of course will keep increasing the team size each year so that we are able to calibrate the cost involved nicely. At the same time, build a channel that can contribute to overall business. And finally, the online channel platforms purely driven by the performance. I think whoever comes in the top 3, they get recommended. In fact, I'm happy to share with you, in the month of January, 3 or 4 funds are figuring in the list of the online channels, which is also leading to a significant increase in purchase volume from the online channels compared to the December quarter. I'm assuming this trend continues, then we'll probably see increased participation coming from the online channel partners. Again, we do it with the purpose of engaging with them very closely, looking at their way of looking at fund selection, and then see how we are actually figuring in their fund selection processes, and therefore ensure that our funds who are actually coming closer to their recommendation process, we ensure that it comes on board. And that's something we've been engaging for quite some time, and we are seeing the result of that as it stands today.
Right, sir. And so what would be the share of online channels in the new flows?
I think on the outstanding basis, we have about 7.5% contribution from the market share on the online channel. On incremental basis, probably the number would have gone up. So I don't know the exact number right now, but the number is, I think, compared to the last month, this one number, if I have to take up, so definitely the number would look up. Maybe I can share with you separately.
Sure, sir. And so in terms of product, are there any gaps which we are targeting, or right now we have a complete product suite and there will be limited opportunities for NFOs?
We have limited option as far as the option of the product concerned. So anyway, we have filed one product which is a con-based product, given the fact that our head of equity has got reasonably good capability to run a con-based fund, given his background. That's something it is there in the pipeline. I think once the team is ready, we are actually planning to do one all-India event with the distribution community in Bombay. It's called Investment Voice, what we call it. And post that, we'll launch this product either the end of March or the beginning of April. The product is already approved in place, and that's something we have seen as a product gap. And other product gaps, right now, there is nothing which is being visualized. We'll probably have more product launches in PMS. We'll have more product launches in passive with smart beta kind of ETF that will start. We're able to charge the higher expenses. And third, we'll have some more product launches in the GIFT City. One is building volume. The fund already launched that predominantly invests in Asia equity. And we'll have 1 or 2 more product launches for the GIFT City area. As far as domestic concerns, we'll have a very limited 1 or 2 options could be there. One, of course, already there in pipeline. 1 or 2 options, we have to figure out what kind of new product that we can launch it as we move forward.
Right, sir. And sir, one final question. Within the categories that we are present, we see that in mid-cap and small-cap, which are the categories which have seen a sharp growth over the last 6 to 8 months, our market share is significantly lower than the overall market share. So any strategy to improve our market share in these categories?
Yeah. So while I'm happy to say that we have seen inflows in our small-cap fund and to some extent mid-cap fund, but small-cap fund has received close to about 5% of the flows for the industry. While that is the case in our fund, but of course, given the momentum that we have seen in the industry, huge flows have come chasing the return. That of course we take note of it, but at the same time, having internal capability on the mid and small cap space, with some changes that have happened in the investment team. There also, of course, some more beefing up we'll do on the investment side. Getting one external person on the mid-cap side, that something is already in the pipeline. It is just to ensure that space where we have internal talent, and given the fact that 1 or 2 exits that happened some time back, I think if we're able to fill that vacancy with the mid-cap manager, then it will actually complete the bouquet of fund management capability on one side. As a result of that, we are able to build size across all our categories.
Understood, sir. Thank you so much, sir.
Thank you. The next question is from the line of Abhijit Sakre from Kotak Securities. Please go ahead.
Hi, good evening, everyone. So first question is, again, color on the channel. So if you could, provide some color in terms of, across different channels, where have you seen maximum redemption pressure? And similarly, in terms of the new inflows that is coming in, is there a specific skew that you're seeing where, one or two particular channels are driving bulk of the inflows?
Sure. Okay.
So, on the new channel side, the MFD is the one who contributes the higher. Then comes the banks and the NDs.
NDs and banks.
NDs and banks. Yeah.
See, in the pecking order, roughly about 51% come from IFAs, MFDs. Roughly about 14% will come from NDs. Roughly about 12% come from the banking channels. About 16% come from the direct channel. Direct includes RAs as well. In terms of steady state of flows that come from MFDs first, then comes NDs and banks. We're also seeing increased flows. It was not so much in the month of December, but I see it coming in the month of Jan, which is the increased flows coming from in the RIA channel, which is predominantly the online platforms, which is the digital platforms. We have seen increased volume coming from that. That's again fuel on the back of the schemes being part of the recommendation list or as part of the algorithm that they may use. Some other funds have been coming in that quite continuously. Therefore, we see the traction coming in that space. And definitely I think MFD channel being one of the largest channel for us, and ND channels would be the major drivers from the overall growth momentum perspective.
Got it, sir. Sir, your comment on the January improvement is good to see, sir. But generally, given the changes that you've seen or you're anticipating in the investment team, do you see any impact of that in terms of how the channel will react to it, or will there be like a lagged impact of these changes in terms of improvement in flow market share that you'll see maybe going into the next financial year?
I think it's actually people have appreciated the change that has come. I think people have given a good feedback on the change that we have made. And in terms of product recommendation, it remains the same, is not affected, given the fact that we always have the continuity factor. Irrespective of the movement of people, we always kept the continuity factor as one of the big strengths of our AMC by way of the structure that we have created within the investment side. That has been ensuring that the product recommendation part of the channel partners remains good, and even improvement on the performance that is being seen also being noticed. Therefore, it can only lead to an incremental volume growth coming in. But having said that, I think whenever we see any change that we are bringing in, that resultant impact of that, it takes about 1 to 1.5 quarters, I can probably say it. Otherwise, that is the normal trend that we are seeing, but giving the push in the market, engaging with people aggressively, and warning the market is the key to the success. That's something we are currently driving it. Well, of course, all these such efforts will lead to an improvement in the numbers and so on and so forth. But having now made changes, having created a positive impact, and the feeling is also pretty decent from the distribution community. That's something should result in as we move forward in terms of numbers improving.
Got it, sir. One question for Parag sir was, any outlook that you can provide on the expense growth for next financial year?
The expense growth mainly will be maybe inflation plus something, because the majority cost for us is on the people side. So people will be inflation plus something, and any growth on the alternate asset side may lead on increase in fee and commission line, but which will be obviously compensated by the top line growth on the income side also. Otherwise, even the admin expenses will.
Yeah, what did you say for us?
So even the admin expenses will remain more or less inflation range only. What we are trying to do that the branch expenses we are trying to reduce by 1 ABC branches. So that may help us to certain extent.
Got it. Hey, one comment I missed, I think opening remarks by Bala sir. Did you mention that you kind of hired some senior resource in the distribution side of the business? If you could repeat that, please.
Yes. With the banking experience and also having had experience on both managing HNIs and family offices, with the wealth management experience, worked as part of the bank and building retail. That's something we thought that given the fact that we need to take the business to the next level, some bit of rejig that we are doing in terms of taking into account the internal talent and aspirations, as well as the external talent that can come and help in building this to the next level. In few areas where we need to see the next level of momentum, especially on retail. So that is where we have made some adjustments, and the person who has come on board, it comes with that experience of building retail. So I've come from the banking background, yes.
Got it. Thanks a lot, sir. And
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. Ladies and gentlemen, if you wish to ask a question at this time, please press star and 1. Well, as there are no further questions, I would now like to hand the conference back to the management team for closing comments.
Yeah. Thank you, and thank you everyone for joining. With this, we conclude our Q3 FY24 earnings call. And do feel free to reach out to our IR head, Prakash Bogle, for any queries that you may have. Thank you.
Thank you very much. On behalf of InCred Equities, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.